So my next guest says it is a close call at the Fed, but it's likely the Fed policy will be a gradualism, right, over optimal front loading. I want to bring in now EY-Parthenon, Chief Economist Gregory Daco. And so it's interesting because you do lay out three reasons. This is not what you necessarily want them to do. This is what you think the Fed will do. And you said they're going to go gradual, in part because most Fed officials favor gradualism.
Yeah, I think in general, Fed policymakers have been talking about a methodical approach to easing monetary policy. Go slow if you don't know, the impact of monetary policy. What we're seeing in terms of Fed Chair Powell is his openness to more rapid rate cuts, front-loading rate cuts, and that's what Governor Waller has also said.
We saw that going into Jackson Hole, right? Because everyone who spoke before there said gradual, gradual, gradual. Get to Jackson Hole and the word doesn't come out of Powell's mouth. What do you think is driving Jay Powell? I have a theory. I really believe, and I go back to the 2018 hike 4 times. That last hike I thought was completely unnecessary. Markets falling apart. Something happened to him, the ghost of Christmas past over the holidays, because he came back in early January, gave this speech, and it felt like his focus shifted to Main Street a little bit. Why is his sensibility seem so much different than everyone else's?
Well, I think he has more of a forward-looking perspective than most of his other peers and colleagues. We've been saying for a while now, and you and I agree on that the economy has been slowing for some time. We're seeing slower labor market growth. We're seeing more prudence on the part of consumers, and businesses are also being much more cautious. So in that environment where inflation is no longer really the main threat that we have to be concerned about, it's optimal for forward-looking policymakers to focus on the next 12 months. And those next 12 months are going to be a little bit rocky. So we have to have monetary policy that's no longer as restrictive, but much closer to neutral.
You also say large cut is an implicit admission of a policy mistake. What if there is a policy mistake? I mean, isn't it sometimes okay to say we might have gone too far, we might have waited too long?
I think that's probably how Fed Chair Powell is going to justify a 50 basis point rate cut if that materializes.
If he could talk everyone else into it.
Yes, he can actually argue that the Fed should probably have gone in July with a 25 basis point rate cut. In hindsight, that would have been the optimal monetary policy decision. And therefore, since we're in mid-September, it's time to go 50 to catch up for some of that delay.
And finally, policymakers remain data dependent. Here's my problem with the data. It's just, unless you go beyond this government, the government data is just giving me fits. These jobs revisions, and I'm not talking about the 818,000, just month to month. They have to see the pattern, so they can't go off. I don't think they should be going off. July was 142. I'd be assuming July was less than 6, like under 100,000.
There's tremendous volatility in the data. And you and I have talked about this in the past. Tremendous volatility. So you have to be very careful. Data dependency was very good, very useful in 21, 22, where the only thing the Fed was fighting was inflation. Now it has to balance the two sides of the mandate. The employment risks are now growing more and more important. That's why the Fed should have more of that forward-looking perspective, see what it anticipates in terms of inflation risks, in terms of risks to the growth outlook, and adjust monetary policy to recalibrate and put itself in a much better strategic decision to approach 2025, which will also be laced with uncertainty.
Between now and 2025, right, though, I think the street's looking for at least 100 basis points. That means there's a 50 somewhere coming. Right?
There have to be, because essentially we have 3 more Fed meetings. So it has to be 25, 50, or 50, 25, 25.
Right. So a lot of folks on the street were saying for months and months and months until last week that if the Fed went more than 25, it would rattle markets. My thinking now is if everyone thinks they're going 50, would 25 rattle markets?
I think at this point, anything could rattle markets because it's going to be a very difficult task for the Fed to calibrate its decision, 25 or 50, with the dot plot, which entails 25 or 50 as a starting point. I think what we should focus on and what the Fed should focus on and what Powell should focus on right now is where the Fed is headed in terms of monetary policy and what the journey to that neutral rate is going to be over the course of the next few months. That's much more important than 25 or 50 basis points, which in the end doesn't make that much of a difference.
And of course, we hope he articulates all this on Wednesday.
Always a pleasure.
Same here, Greg. Thanks a lot, buddy.